We are now on number 26. The following information relates to the business of D. Mahlangu. Inventory on 1 January 2010, 10,000. Inventory on 31 December 2010, 30,000. Purchases 140,000. The rate of stock turn is, here we use the formula, rate of stock turnover is equals to cost of sales over average inventory. Right, let us now calculate cost of sales. Cost of sales, we start with opening inventory. Opening inventory is 10,000. We add purchases 140,000. Get 150. From that 150 we less closing inventory. Closing inventory is given as 30,000. Thus we have 120 is our cost of sales. Now let's work on average inventory. Average inventory is opening plus closing divided by 2. What do we have here? Our opening inventory is 10,000. Add closing inventory 30,000 divided by 2. So it's 40,000 divided by 2, which is equals to 20,000. Therefore, our rate of stock turn is equal to 120,000 divided by 20,000, which is equals to 6 times. Therefore, the correct answer is B. Number 27. The following information is provided by a trader. Total current assets 60,000. Inventory stock 10,000. Total current liabilities 20,000. The acid test ratio is given by the formula. Current assets minus stock over current liabilities. Total current assets is 60,000 minus the fact that it is given as total. It means stock is included. So less even of 10,000 divided by current liabilities were given as 20,000. That's 50,000 divided by 20,000. We have 2.5 is to 1. So the correct answer there is C, number 27. Then number 28. The main source of income for a club or a society is A. Donations, B. Proceeds from dances, C. self-refreshments. D, subscriptions. The correct answer is subscriptions, because these clubs and societies, they rely on member subscriptions. Proceeds from dances and refreshments are additional income, but the real source of income is subscription, which is option D. Number 29. Which of the following is not recorded in the receipts and payments account? A, fixed assets bought in the previous year. B, fixed assets bought in the current year. C, payments to creditors during the year. D, subscriptions received during the year. The correct option here is A, fixed assets bought in the previous year. These do not relate to the current financial year, so they are not included in the receipts and payment for this particular year. So number 29, correct answer is A. Number 30, the following information relates to a football club. Subscriptions received during the year, 12,000. Subscriptions owing at the start of the year, 1,200. Subscriptions owing at the end of the year, 800,000. The amount of subscriptions shown in the income and expenditure account is, we open a subscriptions account. Amount that is owing in subscriptions account is an asset to the club, therefore it carries a debit balance. So subscriptions at the start of the year, 1,200, to leave a debit balance 1,200. We are told there were subscriptions that were received during the year. Take note of our double entry system, which says you debit the receiver and you credit the giver. The receiver is the bank account, so it's the one that is being debited, but we are not talking about the bank here who are on the other end. So we are talking about crediting the subscriptions account by bank. That's 12,000. We are told that at the end of the year, the subscriptions owing was 800. In order for a balance to be a BD on the debit, it used to be a CD on the credit. So we have a balance CD here. Balance CD in the form of the owing, which is an 800. Here what we have, income and expenditure. Income and expenditure on the debit. What is the total of this side? 12,800. We need to have 12,800. Here is the balancing figure. So to have this missing figure, it's 12,800 minus 1,200, we have 600, 11,600. So this one is option B. On number 31, which items are part of direct costs? This is under manufacturing. A, depreciation on plant and patent fees. B, machinery repairs and royalties. C, manufacturing wages and factory insurance. D, royalties and hire of special plant. On A, the depreciation is not a direct cost, but patent fees is. So this statement is not correct. On B, machinery repairs and royalties. Machinery repairs are not direct costs, but royalties are. Therefore, B as well is not correct. On C, manufacturing wages and factory insurance. Manufacturing wages are direct costs, but the factory insurance is not. Therefore, C is not correct. We are left with D. D says royalties in the higher or special plant. This is the correct answer. Royalties in the higher or special plant are direct expenses. D. Now on number 32, a manufacturer provides the following information: cost of raw materials consumed, total overhead costs, manufacturing wages. What is the prime cost? Materials consumed, materials consumed are 175,000. Wages is the direct cost. They are 90,000, 10,000. Remember, prime cost of raw materials consumed plus direct expenses. These are direct expenses. This one is cost of raw materials consumed, 5,000, which is on option B. Question number 33. If closing stock is overvalued, there is A decrease in gross profit only, B, a decrease in both gross profit and net profit, C, an increase in gross profit only, D, an increase in both gross profit and net profit. The correct answer here is D, increase in both gross and net profit. So the option D, let me explain here. Closing stock is an effect of reducing the expenses when you are calculating the cost of sales. If you reduce closing stock, it will also reduce the profit. If you increase closing stock, it will also increase profit.